All right, hello everyone. Welcome to another Red Cloud webinar. My name is Kobe Kushner. I'm a mining analyst here at Red Cloud, and today we're going to be talking about lithium with HeliosX Lithium and Technologies. With us today is Christopher Brown. He's the CEO of HeliosX, and he is joined by CFO Samir. Chris comes from an engineering background. He's got extensive experience in capital markets as an analyst, knows all about the resource sector, and is an expert on all things related to processing. So I'm sure we'll learn a thing or two from him during this call. And just a bit of background on lithium and what's going on. So I think we're all aware of what it's used for and that prices have been on a tear. Lithium carbonate prices are now hovering around $75,000 a ton. Prices have increased nearly 50% in February alone. Interestingly, lithium carbonate prices are still trading at a premium to lithium hydroxide, but it looks like that premium is starting to close, as hydroxide over the last month has been increasing faster than carbonate, so it appears we're headed towards some form of price parity. Meanwhile, low inventories of lithium chemicals all across the board are persisting. About half of global production comes from brines, while the other half comes from hard rock mining. And according to the US Geological Survey, just 4 mining operations in Australia, 2 brine operations in each Argentina and Chile, and 2 brine and 1 mining operation in China account for the majority of global lithium production. That means lithium is subject to supply chain disruptions, which is a huge issue when you consider that the current lithium deficit is expected to grow 7-fold by 2026. And this is where HeliosX comes in. They're focused on the brines, and they've got a large land package in Alberta, Nevada, and Argentina, and they've partnered with some heavy hitters in the DLE space. DLE stands for Direct Lithium Extraction. This means getting lithium from brines without needing evaporation ponds. It could be game-changing, and Chris is about to tell us why. So during today's webinar, the team's going to provide us with an overview and an outlook. And when they're done the presentation, we'll move on to the Q&A session. Just a reminder to everyone on the line that you can type your questions into the comment box at any time. But as always, we have to run through the fine print. So during today's webinar, forward-looking statements may be made. I would direct listeners to the forward-looking statements outlined on the company's corporate deck, which we will see in a moment. And for Red Cloud Securities Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures on HeliosX. And with that, I'll now turn it over to the HeliosX team.
Excellent. Thank you, Kobe. And thank you for those at Red Cloud to help put this together, as well as the time. I appreciate all the investors that have taken the time to call in. A little bit of background about myself. I'm Christopher Brown, CEO of HeliosX. I'm a chemical engineer by essentially education, but a reservoir engineer by training. I did that for about 10 years and then stepped across to the Bank of Montreal, where I started up their international energy research focus of getting institutional investors engaged on emerging opportunities and plays around the world. Focused on that for another decade, then stepped across to start up the Helios group of companies, which HeliosX is one of our focus areas. One of the other companies we had founded grew to become one of the largest tailings ponds operators in the oil sands. We grew that from 2 to will likely be over 100 employees this year. And I'd like to just take a moment to have Samir Blanchard, our CFO, introduce himself as well.
Good morning, good afternoon, everybody. Thank you for taking the time. As Christopher mentioned, we have been working together to get this awesome package together under HeliosX. The assets are really, really attractive. And a bit of my background, I'm a CPA by background, by education, MBA, worked in the US on Wall Street for a decade before coming here and starting the Helios group of companies with Christopher. I'll give it back to Christopher now.
Excellent. Thank you, Samir. So as Kobe explained, our general disclaimer and forward-looking statement, essentially, we just want to make people aware that we're not soliciting for any investments. We're not having any type of sale process for raising funds with this presentation. It's for information purposes only. And again, they are forward-looking statements, so always be cautious of all statements made in terms of estimates, forecasts, plans, etc. Now, to start things off, as Kobe had alluded to or stated, we have over 560,000 prospective acres of lithium brine. We focus specifically on lithium brine as we have particular technical expertise to unlock lithium brine specifically. Our background in reservoir and subsurface analysis, I think, distinguishes us from most players. And with that, we believe we have a strategic advantage on focusing on lithium brine opportunities globally. One of our focus areas is to commercialize Argentina. We're partnered with Pluspetrol, which is one of the largest energy producers in Argentina. They produce around 400,000 barrels a day of production. Exceptionally successful company, very well known, but most importantly, they have amazing indigenous contacts. And that means when it comes to environmental approvals, getting consultation work completed in the field, they are the go-to group that carries a lot of weight in working with the local indigenous to ensure we can execute effectively on the ground and respect indigenous rights in every area we operate. Our community engagement is very important to us. Our HeliosX management team has extensive experience dealing with communities in all areas. Even in North America, we've spent a lot of time with the engagements with indigenous for doing operations regionally. So we have a lot of experience in both engagement and execution to commercialization of opportunities. Why we focus in Argentina is one of our primary areas. From a U.S. imports of lithium perspective, it contributes 55% from Argentina. From a brine-based lithium producer, it is the largest country that produces lithium brine. United States, if you look at the list, you have Bolivia, Chile, China. United States is fairly far back on that list. We hope to change that with time. That'll only come with increased exploration work. But United States, I think, currently only produces 300,000, 400,000 tons per annum contributed towards lithium brine. Another reason is also the resource potential in Argentina. It ranks as the second largest one, even when you combine hard rock and brine opportunities globally. Argentina, in comparison, is one of the largest prospective basins globally for lithium brines. Now, to start off, our focus area in Argentina, why we highlight this as what we call our crown jewel in the portfolio, is because of its close proximity to existing producing basin. When we look at the analogy to Oro Cobre plant and Lithium Americas plant, you have productive lithium brine opportunities in the exact same geological depositional environment. We're separated by a mountain range, and on each side, you can see on the west side, you have the Oro Cobre and Lithium Americas facilities working development of the Salar. On the east side, we have our claims, which is actually a larger geological basin depositional environment. And in the center part, is essentially where the source of the lithium originally started, and it was deposited into these valley fills. So we're very excited to work alongside Pluspetrol. In fact, it's not a joint venture with Pluspetrol. So just to be clear, we formed a company with Pluspetrol in Argentina, and that distinguishes ourselves from joint venture risk when working with your operator. And so we work as a coordinated team together as a single company, actively doing the exploration and ideally moving towards commercialization of the Argentine basin. When it comes to defining commercialization, because of our experience of bringing activities from zero to successful commercialized opportunities, we always look at it from the end result to backing off what it takes to get to that successful outcome. And so in doing so, we come up with our own capital program, our own development program, our resource potential. And this is what we display in the slide currently. So for example, we modeled a 5,000 TPA facility. What is the capital going to take to develop that type of resource? And then 20,000 TPA facility, what is the capital for that? And you can see the range of capital requirements ranges from 100 million US up to 330 million US, depending on the successful outcome. In Argentina, our focus is to get our foot in the door on commercialization and then continue to step out to grow. Our resource that we've identified internally is quite large. And you can see by the footprint, when you're dealing with 41,000 hectares and 51,000 hectares, these are massive land regions to work on for exploration. We have done our own sampling program, which indicated a high amount of lithium content on the surface, but you really don't know what you have till you drill. And that's our focus, is really to bring these to fruition and start drilling some locations on this and our Nevada and Canadian assets as well. When it comes to operational footprint, it's very important to consider environmental considerations. So when we're looking at a 5,000 TPA facility, we want to put in perspective what is the size of that footprint. It's for two reasons. One is we want to be sensitive to the indigenous nations in their region as well as to the government's environmental requirements. But two, we want to keep that as small as possible and maximize investors' return without stepping out with too much infrastructure to commercialize the opportunity. So to give you a sense from an environmental or from an operational footprint perspective, we've placed on the map that you can see in the bottom in the dark blue square what a footprint would be for a 5,000 TPA facility. And I'll highlight it here in a second. So this area down here, you can see that the small blue square to the top would be the entire footprint of success for a fully commercialized opportunity for lithium brine. And the small blue square on the bottom, this one right here, would be 20,000 TPA facility footprint. Now, the significance of that is to give you a sense of how much success we have to meet with to be commercial. So a 5,000 TPA facility would generate an NPV about $900 million. A 20,000 TPA facility would generate an NPV about $3.6 billion. To be successful with a 5,000 TPA facility, I need to drill 7 successful lithium brine wells. And so in this entire acreage, which essentially my business partner Samir likes to highlight, we can fit 17 Manhattans within this footprint of all of our acreage in Argentina. So within that, we need to find 7 successful brine locations of which we can bring to fruition for commercialization. So a big part of our focus going forward for the next year is not only to do the proper geological modeling, but to see optimal locations for these lithium brine targets to look for how we're going to take the next steps towards commercialization. Now, when we deal with the geology in Argentina, it requires a lot of additional work. And so there's still more drilling to be done, but we're taking all the necessary steps alongside Pluspetrol to collect all the historical geological data and then properly interpret it for commercial success. So what you see in front of you is a model of source determination for what would have filled these valleys for lithium prospectivity. And as you see on the map on the top, the west side is the 2 commercial projects. On the one side, the mountain range, which is the source of the lithium. And on the right-hand side, you'll see that highlighted one of our salars that we're looking at evaluating. And on the bottom right-hand side is a 3D geological subsurface model that we've created to date. And this is a lithium distribution model of the information we have so far of a particular interval, even subsurface. So this does not even account for the 1,000 meters of prospective opportunity we may have in the basin. This is a particular interval identified, and we have a lithium distribution model within that. And you can see the range of concentrations in this model range between 300 milligrams up to 600 milligrams with the bright spot in between. But for our purposes, it's not just good enough to identify the resource. We have to understand the risks associated with commercialization. And what we incorporate is what's called a dynamic fee flow model. And this model incorporates fresh water coming into our system that might dilute or risk dilution of future commercialization. And so for us, it's important to not only identify the resource, do the geological model, but we also want to understand the risks associated with that geological model. And we're taking the steps this year to do the comprehensive simulation work to identify what could have influenced the outcome. Because when we drill our locations, we want to drill optimal locations for commercialization going forward. And we're very excited about this year's program. Our other exciting opportunity falls back on North America, in the United States and Nevada particularly. We're partnered with Lilac Solutions on a play that we call Alkali Springs. Now, what we like, again, is proximity opportunities close to realized commercial opportunities. So in this example, we're offsetting Silver Peak, the only productive lithium brine mine currently producing around 4,000 TPA, I believe, today. Has capacity of 5,000 TPA with plans to expand to 10,000 TPA by 2025. We, again, are just over the mountain range. We have an identified salar system, and we're looking at drilling the location this summer on this area. We're very excited to work alongside Lilac Solutions. They're a fairly well-known, privately funded DLE company. And again, pending identified success, we'd work alongside Lilac for potential implementation of a pilot facility for testing out the lithium extraction technology. Our other acreage in Nevada is called Teals Marsh. It has 7,900 acres. We've done some initial surface work on it to identify that lithium is present in the resource. But what now needs to happen is essentially let's drill a couple of locations and identify what truly we have subsurface. So we have 2 pads constructed in Teals Marsh for a couple of drill locations. We're thinking and working towards permitting for this year end. If not, we'll focus a drilling program for 2023. And then finally, our last area of operations is in Canada. On the right top of your screen, you'll have a heat map, and this heat map highlights a distribution of lithium concentrations from water samples from old oil and gas wells across Alberta. And so obviously our focus area is in the hotter places where there's been indications above 100 milligrams per liter. In the Fox Creek region is where we focused our initial acreage. And we acquired 4 large leases in the region. We have accumulated about 310,000 acres of prospective exploration opportunities in Alberta. And the goal here is to put down a well in the near term to identify the resource. Now, the difference between Alberta and your Nevada and Argentine asset is that there's no surface expression of lithium in Alberta. You have to have a water sample, and these water samples tend to be from about 2,000 meters deep. So they are more expensive wells, but the larger opportunity in Alberta is that they're encased in large reef structures. And so the benefit with the Alberta opportunity is it's very well delineated from a geophysical perspective. From a volumetric perspective, these reefs are massive. It's just that the wells themselves cost a little bit more than they do in Nevada and Argentina to drill and extract the resource there. Again, a situation where you have productive reefs that 4 to 5 locations could easily justify a commercial opportunity, depends on the productivity from the reef itself. We are working with a group called Litus. They're a University of Calgary-based entity. They've developed a fairly unique extraction technology we're looking at doing a pilot program on. We're currently doing the detailed engineering work on that program to make sure we have a good idea of the costs associated with the pilot program. And we're currently also doing the technical evaluation of the extraction estimates, et cetera, so that we have our baseline estimate for what we want to see as success for the pilot program. So that's currently ongoing, and we're very excited to work with the Litus group and hopefully have some positive news on a pilot program in the near future. So our highlight for our presentation is essentially not hanging our hat on a single type of direct lithium extraction technology to commercialize. I think that every reservoir, and one thing that we've learned is every reservoir is unique, and every reservoir will require a unique solution for lithium extraction technologies. And so what we hope to do is by diversifying each of the basins with different types of extraction technologies is to optimize the potential recovery and customize the solution to the basin that we operate in. I did forget to mention that in Argentina, we're working with Koch Solutions and currently working on, again, a type of model to determine what would be the optimal type of extraction technologies that we could use via Koch separations in Argentina. And that's an ongoing process as well. Some of our other technologies that we have in-house that we're currently under review for initial feasibility on the engineering side involves gold. So as something that we're developing on an environmental positive side is using iodine extraction for gold instead of using cyanide. This is a positive environmental step we'd be interested in taking, and it's something that we're currently reviewing internally. We have partnered with one of the largest global gold concentrate marketing companies on this project. They're very interested towards environmentally positive initiatives for gold extraction. And so again, staying within the extraction realm, we're very excited to continue to work with that group, and we'll hopefully have news in the coming year about the results of the engineering and the pre-feasibility on that program as well. So overall, our catalysts to define for potential future investors or existing investors would be to continue our evaluation work and delineate the Nevada and Argentine assets. Currently working with Pluspetrol in Argentina, we're undergoing a large sampling and environmental data collection work for the lithium brine results, and hopefully have some results in later half of 2022. In Alberta, we're going to continue our resource review and selection of drilling locations, as well as our pre-feasibility work with the application of the Litus pilot facility. For drilling, Nevada, with Lilac Solutions, we look to drill a location in mid-year this year on that offset opportunity. As well in Alberta, we're hopefully going to be in a position to drill in early 2023 with an identified location. And in Argentina, we're going to complete our geophysical and surface sampling work in 2022 with aspirations to drill 2 locations, maybe up to 4 locations in 2023 on our acreage in Argentina. With our pilot facility opportunities, like I said, each one is jurisdictional based. Each type of technology is unique and custom to the region, and we hope to unlock commercial opportunities uniquely to each jurisdiction. From a valuation perspective, what's in the stock today versus what could be in the stock tomorrow? Again, these are our estimates based on the valuation of commercialization in Argentina. From a lithium acreage perspective, just by continuing on with our resource evaluation and putting out more accurate resource guidance to the market, we believe that there could be valuation appreciation from our current status of about $20 million to about $170 million of incremental value with the resource evaluations. But from a commercialization standpoint, as we take steps to commercialize Argentina on the smaller facility, if that's what all that existed in Argentina in our portfolio, we can unlock up to $330 million of value for investors there. But the goal in Argentina is to start with a 5,000 TPA concept, but get line of sight on the larger resource opportunities in Argentina. And that's when you can get up to $1.4 billion of potential unlocked value. And then on the gold extraction and tailings extraction side that we briefly mentioned, there's opportunities there that could lend themselves to $600 million of opportunities just with working Canada alone. So from a potential upside perspective, from a company that has a market valuation of about $30 million, we're focused on unlocking up to $1 to $2 billion of future value with the company. From a structure standpoint, we have a low share count, about 36 million shares outstanding. From warrants, we have about 10 million warrants at 75 cents. And options, we had just issued options for the company recently on an announcement. So our total option count is about 3.2 million shares. If you'll notice in our press release, even though the share price was below our issued price, this is just the way we work to make sure all investors are aligned and management is aligned with the investors. And so we chose not to issue options at a low price. We chose to actually issue our options at a premium to the market price at the time. And we stand by that in terms of aligning our interests with the investors' interests as well. So with the current market price ranging in the 85 cent per share range, it gives a market capitalization of about 30 million. And currently we have about $1.5 million cash on hand for an enterprise value of about 29 million. Inside ownership is about 13%. Myself and Samir, who are on the call, are the CEO and CFO. Brian Finlay is the president. And then we have Frank Bush and Bob Verhelst as directors of it. Frank, in particular, brings a lot of Indigenous expertise for a lot of the work we plan to do in Canada. And so we appreciate him being part of the board. And Bob Verhelst brings a significant compliance background that we look to leverage off of as we continue to grow the company. And with that, I'll turn it back to Kobe.
Great. Thank you, Chris and Samir, for the very informative presentation. We will now start with the Q&A portion of the webinar. Just a reminder to everyone on the line that you could type your questions into the chat box at any time. So we do have some questions here, but I mean, before I get to them, I just want to kind of take a step back here. For those on the line that don't know what DLE is, can you just tell us briefly, what is DLE? How does it compare to traditional brines, and what are the benefits?
Oh, that's actually very good question. So historically, lithium extraction has involved large-scale evaporation ponds. And you'll see in our presentation there, when you have these large images of these beautiful blue ponds in Argentina, that was the traditional mechanism of which they would rely on these ponds that drop the brine into the pond and require up to 2 meters of evaporation in order to improve the concentrations within the ponds. And each of the ponds would have stages to improve the concentration so that the lithium could be effectively extracted. What DLE has unlocked is the ability to accelerate that process more effectively and reduce the environmental footprint in the region as well. And so it's a very important next step. Previous operators did not have this ability to access this technology. What has really been the step change event that unlocked the new technology for people to focus on, to take it from bench scale to now pilots, which we see across the US right now, is essentially lithium pricing. That encouragement and realization that there's only so many jurisdictions that can produce lithium, there's only so many friendly jurisdictions that people would want to operate in, has really accelerated that technology evolution. And that DLE extraction process is taking step changes daily. And this is why sort of hanging your hat on one horse type of thing is a risk in the DLE space. Not all DLE is going to be created equally. my view is there's going to be risks associated who's the most efficient process depending on the characterization of the reservoir and the chemicals that you need to extract efficiently. So DLE is going to undergo a lot of evolution changes, and that's why we like to spread out our opportunities for the various DLE technologies that are available, because each one has its own advantages and disadvantages, and we hope to capitalize on what we see as advantages in the particular regions to make our commercialization that much more economic for ourselves.
And is that why you guys are not developing your own technology? You know, I've seen some of your peers that are all trying to each develop their own thing, and you guys have chosen only to partner with others.
Yeah, it's all perspective in terms of who you want to partner with is very important. We don't hold ourselves out to be the most technical, accurate DLE guys, for example. That's not our specialty. Ours is reservoir identification, exploitation, and operational skill set. So for us, we focus on what is our strong suit, and that's bringing things to commercialization. And that's essentially, it's one of those situations where you hire the smart people to join you. And that's why we look at each of the DLE guys, and each of them brings something unique to the table, which is a value add to our company and makes us stronger. We don't ever claim that we know everything about the whole lithium space. I don't think any company could lay that claim, but it's finding the right people, hiring the smart people and the motivated entrepreneurs that want to take it to the next step. And that's the approach we're taking.
Right. And, talking about partners here, you've got Plus Petrol. That's a very large petroleum company. They're not a lithium company traditionally. So how did you attract them? Was it the asset? Was it the team? Was it something else altogether?
Excellent question. Plus Petrol chose on its own right to focus on lithium brine. They actually identified the similar opportunities that we did from, essentially taking old oil and gas guys in Alberta who understand subsurface and reservoir. It translates amazingly efficiently over to lithium brine understanding. And Plus Petrol identified that Argentina has a huge prospectivity of lithium brine reservoirs, and they're able to understand it fairly well. So I remember when they originally started their commitment, they were verbally committing over $1 billion of funds that they're looking towards extracting lithium in Argentina. And now they have accumulated 10 identified prospects, all within a very commercial areas within Argentina. And our goal there is to just add value technology-wise. Like the Plus Petrol guys are phenomenal from a geological perspective. They have all the technical data of every salar down in Argentina. So they're an amazing resource for us to get analogy information from for better understanding what we have. But our value add is in Canada, we drill hundreds of more well locations than they do in Argentina. We bring technical skill set on efficiencies of drilling, types of drilling, drill pad technology, or drill pad techniques to reduce footprints, and then operational expertise in handling large volumes of water. Like my operations company up in the tailings ponds in the oil sands, technically those are the largest evaporation ponds in North America. So you're not going to get that type of experience in Argentina that we have in North America on operating massive amounts of water efficiently and working with people and personnel, as well as indigenous consultation, which is very important. So overall, Plus Petrol made the commitment to go that direction, but I found them great to work with about collaborating and jointly putting together our technical knowledge.
Cool. And we have a question here. What's the name of the jointly owned company in Argentina?
Oh, currently it's still called Direct Resources, which was the amalgamation that we did with HeliosX and Direct Lithium in Canada. So that it's called Direct Resources SA in Argentina, and it's jointly held between ourselves and Plus Petrol. So what's nice about that, and one thing we like to emphasize, is it's not a joint venture. So essentially, we're not two companies competing where one company can outspend the other company or try and leverage and get something from the other company. We're one company. We have a set of employees. We put our budget in with them, and we cooperatively meet as a board of directors and come up with a strategic plan for next year's budget and an exploration program. It's very collaborative, having a corporation as the entity and not having two exclusive companies trying to battle out for one to beat the other. So it's actually worked out very well to design it that way.
Okay. And, I guess speaking of Argentina, and I remember you once mentioned this to me before, but there's some kind of commercialization window where you have to, anything outside of this window just likely won't work. Can you touch on that?
Oh, sure. That's actually a very good point. You know, when we evaluated Argentina, it's always, you know, interesting to have a phenomenal reservoir. But, you know, what we learned in Canada is that you can have a great play prospect, let's say in Northern Arctic, but then face other challenges in terms of commercialization, getting your commodity to market, or being able to provide the energy you need to be successful with your operations. Everyone likes to drill a great, you know, well in Northern Canada and end up with a big oil exploration success, but then, you know, lacks the ability to commercialize it and actually deliver value to shareholders. What we identified in Argentina is that there's what we call a window of commercialization, meaning that there's two significant natural gas pipelines that go between Argentina through to Chile. Now, the issue is that no matter how successful you are in Argentina and or in Chile, you have to be in reasonable proximity to these two natural gas pipelines. And the reason is that, for example, like the Ojo Cobre facility, it draws nearly 1.5 BCF of gas a year in order to provide the power to do what it needs to do successfully in Argentina. And there's no solar panel field in the world that's going to be able to, you know, replace your ability to access that natural gas. And so you do need to be in a reasonable proximity, because you can have the best discovery, best reservoir, but if you don't have the power to run all the equipment you need for extraction, you're just going to be a stranded event. And the issue is that we're trying to reduce our footprint, not expand it. So the Argentine government wants, you know, less evaporation ponds. Great. Well, we have DLE. But then on the other side is they're never going to accept a large solar panel farm because that goes again against the large environmental footprint that you're going to leave to put, you know, hundreds of solar panels to backfill the amount of power you need to power these facilities. So there's, you know, there is an advantage for us because literally the pipeline that feeds the other facilities actually crosses right through our property. So our tieback is actually exceptionally cheap.
Interesting. Okay. So I guess that's something to look out for when I'm looking at brines in Argentina.
So, well, yeah, longer term, like there's always the, you know, drill for that one successful trade for 3 days. But if you're actually looking at the investment, yeah, you really have to consider the long-term commercialization opportunity.
And, you know, I think moving away from Argentina now into Nevada. So onto Lilac, you know, I've seen them partner with several other juniors before. I haven't really seen them actually own a stake in our project too often. So is that rare for them to do? And maybe tell us the backstory there.
Well, I think that's the evolution of DLE guys. Like ultimately, your DLE is not going to be anything particularly special because it's starting to become quite the crowded market. So if you're thinking that you're going to come up with a DLE solution that everyone's going to adopt, I think that is not going to be actually the ultimate case. And I often point to Plus Petrol in their research lab has 9 different technologies they're currently reviewing for DLE. Like that's how crowded the universe is of getting in the DLE basin. So I think Lilac is likely identified that they have the access to capital. They have the DLE technology they'd like to implement that they know intimately how to commercialize that. And I think the next logical progression for them is to look for effective resources and basins to deploy that opportunity in so that they can enjoy the economics of their efficiencies of their particular DLE system that they know best. And so I don't think we've heard the last of Lilac going into basins and taking more ownership of opportunities. It's a very, very logical step. They're very well supported. They have some well-known shareholders. And I think we're going to hear a lot more from that company as they grow to become more successful globally.
So we have a question that kind of ties into this, but what is the best third-party evidence or documentation that, you know, DLE, that various DLE technologies that you've brought up can produce lithium at an OpEx level of, say, $5,000 a ton?
Oh, so I guess what they're asking is essentially, if you take it a step back, producers that commercialize lithium projects historically have had evaporation ponds. For example, our $98 million of capital cost for a 5,000 TPA facility. If you notice one of the line items, and we don't have it on display right away, but I believe the line item for just the evaporation ponds, for the construction, lining, the piping in between the ponds runs about $27 million. So ballparkish, about a third of my cost of my capital cost was with the evaporation ponds themselves. If DLE can come in, and this is why the pilots are so important to understand the capital and the operating component of that, because if my DLE can come in matching those, that means today, if my DLE facility runs me $30 million in Argentina, I'm at the same cost base of evaporation ponds, which means I can actually have my economics work at $20,000 a ton sale price of carbonate. Now, if my DLE has the ability to come in below that with time, that even drops my economic hurdle for the amount of concentrated lithium I need to discover. But it's going to be relative to the pilot successes and evaluating those effectively for how much did it take not only to construct it, but mobilization and timing. Like, am I ordering products or catalysts for my DLE system that take 2 years to deliver? Things like that will factor more into that DLE discussion. But that's how you do a relative comparison, because we know how much evaporation ponds cost. And so as long as that DLE can be competitive for that, that means, overall the economics should work relatively well.
Yeah, I guess it's still quite early stages in DLE. But I think there's a lot of like indirect benefits to, the environmental footprint that you touched on. And do you even need like a tailings dam for DLE?
You don't need a tailings dam, but I would highly suspect that as part of our emergency response planning, just from my experience in dealing with many other types of operations, that you will need a lined tailings region. If there's an emergency evacuation of the facility, the issue with the DLE processes is they all require a component of acid, and that acidic component of the water, that when you're dropping the pH of the water through your DLE process, you can't just spill that out into a field if there's an emergency in the facility. If there was an evacuation event which required you to get rid of all your fluids in the facility for whatever reason, you would likely need some type of tailings or large tankage to accommodate that output of those waters. Okay,
interesting. That's another thing I feel like investors should probably watch out for.
Oh, 100%. Understanding the your situation of what you're getting engaged with at DLE and thinking it through for all the potential risks is going to be so important.
And we haven't really spoken much about Alberta, so given all the existing wells and the existing data, will you actually need to drill new wells in order to produce an initial resource there, or is the initial wells just to get the product and run your pilot plant?
Ideally, you want new wells. History has indicated we have a lot of old well bores in Alberta, and what we have there is deteriorated casing. And so a lot of these situations, the tubing or casing is in very poor shape. It's been on production for 50 years or 30 years. It's not ideal from an environmental protection standpoint to utilize too many old well bores. It's a nice, cheap way to get up and running. Like if we look at a pilot, we may give consideration to a pre-existing well bore just for a pilot basis. But if we want to be environmentally responsible, realizing we're dealing with a focus of really, saline-based water, we want to make sure that the tubing we're using is stainless steel and can manage any type of corrosion associated with the water processing we're doing. So ideally, you want new wells to start up. It's nice, cheap way to get going is to use old wells, but with an idea that you'd migrate eventually to new well bores for your optimal production scheme.
Okay. And are there any hints as to what's to come in terms of M&A? Are you guys looking to pick up more ground, or maybe divesting your gold processing facility technology? Maybe touch on what's to come on the M&A front.
Well, sure. With our amalgamation process, we actually created 2 new shell entities that are reporting issuers but not listed. And so everyone that held our Asian stock before have these 2 shell entities in their portfolio that they don't know what to do with. They have no value today, but it was by design. Like the idea was that we want to mature some of the gold processing component, the extraction technologies a little bit within the parent. And then eventually the idea would be look at maybe rewarding shareholders with rolling those out into separate entities. Everything's to be evaluated still. We don't want to just throw a new technology starting from scratch into a shell. No one's really going to be able to unlock the value of that. We'd like to bring them along a little bit further along before we decide what to ultimately do with it. But the 2 shells provide us optionality to roll things out very efficiently at any time.
Okay, that actually answered one of our questions here. They were wondering what they were.
Yeah. So the two shells are ESG Technologies, and the other one's called Helios Infrastructure. For now, they're just holding names. We will determine what we do with those over the next year or two.
Okay, but you recommend people hold on to that?
It wouldn't hurt.
All right, so I guess maybe a question here. Is there any room for any kind of government loans?
Well, have been, or both in Canada and the US, there's not only today, but there will be more likely loans and grant systems towards lithium extraction. I think as US prioritize that more in terms of being a key commodity. If you look at the list of where they're currently getting their lithium from, you have Argentina as the #1 supplier. Next is Chile, which, rumors of nationalization and headaches ahead of you there. China, which again, depends on the outcomes of China and what may happen with this unfortunate Russian-Ukrainian distraction. Could actually see what China does in this current system. I think we can look forward to some probably volatile news on what China's actions are in the next 30, 60 days. And then your last one is Russia. And so given the circumstance with Ukraine and Russia, now US really has to start prioritizing how they're going to source their lithium for future opportunities. And Argentina is definitely going to stay on the radar screen, but domestically they have to start looking at Canada and US and providing incentive programs. Like in Canada, we solicited the government to reimpose or impose tax benefits that the oil and gas industry has for our lithium brine wells we drill in Alberta, for example, because currently you don't get the tax pools. If I drill an exploration lithium well in Alberta, I have a note from the CRA, I don't get a exploration expense with that. But if I go drill a geothermal well for the same reservoir, I get 100% tax pool for that. And so the things have to catch up on the government's perspective to get up to incentivize more lithium exploration, both in Canada and the US.
Yeah, I agree. Especially it's clearly never been more important than now to try and secure your domestic supply. And on top of that, the potential OPEC of Chile. I've seen other governments do this. Mexico just announced they took away a mine from Ganfeng, and even Canada put a halt on a merger temporarily, the neolithium one. So yeah, it's definitely very important. And I guess to address an elephant in the room here, one of our questions is asking about water rights at your projects.
Yeah, water rights comes up quite often in the US basins because it's far more sensitive. Just as general background on the investors, water is becoming a highly sought after commodity these days. In Nevada, we do own the water rights. We just recently essentially extended them for another 3 years on our Teals Marsh. So we're very well covered for use of water, regionally sourced water for the activities we'd like to undertake for some of the drilling there. But that's definitely going to be an ongoing issue in the US to try and balance lithium exploration and the need for actually water to utilize for the development of those opportunities. Argentina, it's the same issue. Very sensitive about water. You don't hear about it. We know about it, and we're also very cognizant of it. And we just want to be respectful to make sure that even the perception of drawing out water, that we're not taking fresh water away from Indigenous communities in the region. And that just comes from, it's our responsibility as a company down there to message that well to the communities. We can't rely on the government to inform the communities of this. We just have to get our people out there regularly, telling them that the brine you see coming to the surface is the salt water, not the fresh water, making very basic things clear to them. But also when we're doing our exploration work down in Argentina, for example, we are looking for freshwater intervals because it's part of our analysis. We want to know what may be encroaching on our saltwater brine reservoirs. With that could come information where we could drill a well for an Indigenous community, give them another source of freshwater access. So it's a dual benefit for us to maintain our activity and exploration because we also want to give back to the Indigenous communities where we can contribute back.
Great. And to wrap it up here, there's so many lithium juniors popping up everywhere. No surprise, just given how hot the market is. But for investors that want to play the space, they're not sure which one to buy in, why HeliosX? How do you guys, what's the biggest differentiator that makes you guys stand out?
Well, I think it's our technical approach to the reservoirs. We're not here to do promotional activities and collect as much acreage as possible and tell the market that we have millions of acres of lithium brine rights in Argentina or Nevada. That's not the point. We feel we have a particular technical aptitude towards reservoir identification and analyses. We have the ability to operate on surface. We know how to mobilize personnel, and we look for effective partners that help us become better together. We're not saying, like I said, that we know all aspects of the operations from A to Z, but it's identifying what we don't know and bringing in the proper partners to help us with that. I think that helps differentiate us as well. And that's why we have different DLE partners in each jurisdiction, because we think they add value to those jurisdictions in different ways.
Right. And with that, I think there's no better place to end it there. So Chris and Samir, thanks a ton for joining us. Chris, it's always a pleasure picking your brain on these things. And to our viewers, if you want to learn our thoughts on HeliosX as well as other companies that we watch, we do publish all of our research on our website. It's totally free of charge. And just a reminder that our next webinar will take place in a week from now at the same time when Taylor Combaluzier sits down with Gold Play Mining. Again, that's Tuesday, April 5th at 2 p.m. Eastern, 11 a.m. Pacific. Thanks, everyone, for tuning in, and have a great day. And thanks again, guys.
Thank you very much.
Thank you.